All right, how do we know it's spring market? We're getting multiple offers and way over the list price. All right, let's hear about it. This is the real story with Adam and Sherry. I'm Adam Hamalian,
And I'm Sherry Hutchens.
and this is where two broker associates with 35 years of experience talk about all things real estate. All right, let's get going. Sherry, how are you doing?
Doing great. Great. Had a good week so far. And it's only
Yeah,
Wednesday.
it's been busy. We had three different properties this weekend with open houses and felt like we were running all over, actually two counties. I was about to say all over the county, but we had one of the houses in Alameda County.
Yep. Yep. It was a busy weekend. There's three open houses, two people. That math does not really work. But we figured it out.
Yeah, fortunately, we have some friends in the business that helped us with a couple of those, which was great.
Yes.
One of them was that 100-plus-year-old house in Rockridge, and
Ye-
that was the second weekend that was open. That was pretty crazy this week, and they still had, I think, 100 groups through there.
Yeah. They tour differently over in Oakland than they do out here in Contra Costa County. So,
So I did the open house there on Saturday, and I learned something new that was kind of crazy. My backyard neighbor, so it's my childhood home, if those people have been following along, um, the backyard neighbor, who's only lived there a few years, told me, came over to look and talk about the back fence needing to be replaced, and that'll happen. But she told me that the basement of her house was a speakeasy. So figure that like all these houses were built around 1910 and that there's an outdoor fireplace in the backyard that I just assumed was an outdoor fireplace. And she says she thinks it was a distillery because there's
oh,
pipes that
gosh.
run from that fireplace all the way back to the house.
Wow.
Yeah, it's
Only houses could talk, the stories they could tell.
I know. I heard about microbreweries. I didn't know about micro distilleries, but um, yeah.
That's
All
fun.
right.
Wow. How
Uh,
fun.
yes, and then we got offers on that yesterday.
Yeah, good.
That was good. In contract, happy
Yeah.
sellers, happy buyers, I think.
Five offers after being on the market for two weekends and a week in the middle. We would have had eight offers, but three of them got cold feet and backed out yesterday morning. But we're happy with five. You know, all you need is one good offer. It's great to have two in case you need to do counter offers. But there was one that was clearly better than the other four of them. I think that the seller was pleased.
Yes, it was a little bit odd because my brother is traveling internationally, so we had to wait to get in contact with him in Greece as he arrived at his hotel at like 11 o'clock his time, but was like 1 o'clock in the afternoon here. So that was nice to get positive. I mean, I was happy, nice to share with him the bids and get a
Yep,
positive result there.
yep, yep. So
All
do
right.
we don't want to talk about how far over it went?
No, not really.
All right.
People
Okay.
can look at the closed sale.
It was a good offer. Every agent in Oakland has called me this morning to ask questions about it. That should tell you enough right there.
Yeah, the Oakland market's a little bit wonky in that they regularly, and we did this too, market their homes 20% below their value and just let buyers determine what the value is. So that's what happened. And
It's called non-transparent pricing. It is unique to the Oakland and Berkeley Hills. They don't do it in all of Oakland,
yeah,
just
right.
Oakland, Rock Ridge, Elmwood, Hills area.
Yeah.
It's hard to
Well,
figure out a price.
one of the things that was not a concern for this property, but is a big deal for a lot of properties right now, and that is insurance. A couple reasons. Part of it is it's in an urban setting, not near a wooded area. It's a stucco siding. Its roof is relatively new, and in the process of getting ready for sale, we updated all the electrical and all the little things that are insurers are being really cautious about got taken care of. And so that actually ended up on this particular sale not being an issue. And that leads us into today's guest. Today's guest is Ray Badock, and he is an insurance broker with RC Fischer, and he focuses on personal and residential lines. And we're so excited, Ray, to have you join us.
Thanks for having me.
Of course. We first met Ray a little over a month ago because he spoke at an invitation of our broker at an office meeting, and he was so articulate and clear about the current state of insurance. We just thought it'd be great to have him on the podcast because it tends to be one of those things that is hot for every transaction that we come across, even though it wasn't on that for the property in Oakland. So, Ray, welcome, and thanks for joining us.
Great to be.
Yeah. We like to do a little storytelling and just so that people have context, maybe tell us a little bit about how you got into insurance and maybe what you like best about it.
Sure. I hardly had the childhood dream of falling into insurance, but here I am. I am from Colorado, and I moved out to California about 24 years ago now. And I was at the time actually working at Wells Fargo Mortgage, believe it or not. And
Oh,
so
interesting.
I was on the underwriting side, and I worked there and transferred out to this Walnut Creek office, a place I'd never heard of before, but now live here and love it. And so I worked there till about 2007, about a year before the crash kind of happened. And from there, I needed to figure out what I was going to do. I actually had a brief foray in playing some poker for a little while.
Oh,
Uh,
wow.
Very brief. I really wasn't successful, but I did a great job of breaking even. So that was that's not paying the bills. So, anyways, I had a friend of mine that was already in the industry, and he introduced me to a broker by the name of Heffernan Insurance Brokers.
Oh, yeah.
Yeah, I started there. I worked there for 4 years. I actually was out of the Petaluma office for 2 years, and then out of the Walnut Creek office for 2 years. And it was a great experience. I got to learn the ropes, got to understand markets. I had some great colleagues there. And about 12 years ago, I had the opportunity to come over to RC Fischer and manage the department. And so I went ahead and made that move, and it's been a very good move. The market hasn't really been fantastic over the last couple of years, and even leading up to that, there were some issues. But it's a great company. I really like my colleagues. We have a fantastic team that I work with here. And something I guess I like about the industry, it's really just helping people out. I mean, a lot of people don't know insurance, it's foreign to them, and it probably should be. So just being able to explain things and making sense of, all that's happening is where satisfaction is had right now.
Well, that's great. Well, that's what we're hoping to do today, actually. So I'm glad that that's something you enjoy because there's tons of questions.
Good.
Um, you know, our audience won't be surprised that insurance is a sticking point here in California, between rates going up, but even worse is when policies are being people are being dropped, and it's not always clear. Sometimes it seems obvious because it's a high risk, and other times it just feels random because we don't understand it. So we're hoping that you'll give us a little insight behind the curtain and better understand why it's happening, and then what our potential clients can do to make their either rectify the things they can control around their house to be more insurable, and where to look for resources. Um, I'm just so one of the things that I hear every once in a while is people decide that they're just not going to get insurance at all because it's too expensive, and that's a rarity. But maybe you could just start us from the beginning. Why is it important to have a homeowner's policy? And we can talk more in depth about different kinds of policies in a bit. But why is that really important?
Well, I mean, the number one, of course, is protecting the asset itself. And for a lot of people, your home is your largest asset. So, for somebody that considers maybe I don't need insurance, I mean, that's a pretty risky move, of course. Insurance, the tricky thing with insurance now is a lot of people, there's a stigma about it. People don't like it, and I get it. You're paying this bill every year. You're not really getting anything out of it. So what's the point? Well, I mean, when bad things happen, that's, of course, when you're going to want a good company to come into play. And it really should be looked at insurance as a catastrophic type of situation before you file a claim. People will look at it as maybe like a home maintenance kind of thing, or almost like a home warranty. And for some years, until the recent years, you might be able to get away with that to an extent. But in this market, that's not at all how you should look at your insurance. It really should be, for something very significant. Fire is, of course, a lot of discussion here. But really, the number one loss type that we still experience, and I think this is still accurate, are water claims. As you may expect, they can be very costly. And what's covered on most homeowner policies are your sudden and accidental water damage situations. So that's like a refrigerator line breaks, a dishwasher line breaks, a plumbing piping in the wall breaks, things of that nature. And that can lead to very significant damage depending how quickly things are handled. We've had claims get into the hundreds of thousands before for water damage.
Wow.
How things were impacted and how quickly we knew the damage was happening. So it can be very significant. And so, the insurance is really there to, of course, reimburse, take care of those kinds of things. So you're not out of pocket significant money. And that really should be the stance now. Catastrophic situations should be considered. So we'll get into some details about strategy, I think, on insurance.
Yeah. So when I hear you say that, it makes me think that people should have in their savings account whatever their deductible is. So if your deductible's 5,000 or 10,000, that you're still paying for the first part about that. So if the claim is 100,000, saving 5,000 for deductibles seem like that's a bargain compared to what could have been there, and a little peace of mind. The other reason, which we live with on the buy side, is that lenders require it, right? Because they have an investment in the house and they want to make sure that their investment is covered, so they require a homeowner's policy as well. I'm kind of curious about, there seems like there's a bunch of choices that are given, replacement value, building code updates. I mean, I'm not even sure what they all are, but do you have any thoughts about which of those, or like why are those choices that you might make to get a replacement value upgraded to current code, or other things that I'm not even sure about?
Yeah, that's a really important piece, is to do everything you can to have replacement cost coverage on your homeowner's insurance. And that is standard. There's not a lot of companies, like the companies State Farm, Nationwide, Travelers, Allstate, these companies all insure on a replacement cost basis. They may have some specifics within the policy you want to watch out for. It could typically be involving the roof. Maybe if a roof hasn't been updated, there could be a stipulation for actual cash value coverage. That's pretty rare. You will see it now with the current market, though, with these specialty companies that we're having to utilize more frequently, that they may have actual cash value for certain items. Like that roof example is a good one. Some companies say if a roof hasn't been updated in 10 years, we would only insure it on an actual cash value basis. What does that mean? Well, it means that they will not pay for replacement materials. They'll only pay for the value of the materials of the roof at the time of the loss. So essentially, it's significantly depreciated. So you probably only get, let's say it's $20,000 to replace your roof. If it's actual cash value, I mean, depending on the age of the roof, the condition at the time of loss, you probably are only getting, maybe 6 to 8 to 10,000, maybe. I mean, something in that range. So it's just important to at least know, the type of coverage you have, and how that could, potentially impact you.
That's interesting. So like if I have a 30-year roof and it's 10 years old, I might get 2/3 value, replacement value.
Something like that, right?
Even if they brought it into today's dollars, I'd only get 2/3 of what a new roof might cost, or some calculation like that.
That's exactly right.
Interesting.
And that's an important part. I know we're going to talk about California Fair Plan, and not to jump too far ahead, but roofs are such a big topic with insurance right now. And one stipulation California Fair Plan has is if the roof has not been updated within 25 years, the entire policy defaults to actual cash value. And that's a problem for a couple of reasons. One, a lot of people have 40 or 50-year roofs. They shouldn't have to update it just after 25 years. But we're kind of caught in this box that says, hey, no, it has to be done, and there's no negotiation around that. And so that's a significant item to consider, is if your roof hasn't been updated, you may not even be positioned to get replacement cost if it's California Fair Plan. And so that, you also asked about ordinance or law coverage. Like that would really speak to rebuilding to current code. And so the city and county like to really make new codes and requirements frequently. And there's things I couldn't even speak to. I mean, the biggest thing would be, interior fire sprinklers are now required for construction. So, if you had a significant loss and things had to be rebuilt, you would have to factor in things like that. And that's where that ordinance or law coverage would come into play. And simply put, the older the home, the more coverage you should have for ordinance or law. Newer homes wouldn't need as much because they're at least, more recent to code.
Interesting. So you mentioned a couple not lenders, insurers, and so I'm curious for you as a broker, do you have access to all the providers, or are there certain insurers that only work through their agents? And why might somebody choose to call you? I mean, the obvious is you have more choices, but like, you could talk about the dynamic of going to the blank company insurer versus you as a broker.
Sure. So you have two options when you're looking for insurance. You either go to a direct writer, and a direct writer would be like a State Farm, Allstate, Farmers, AAA. Those companies, if you go there, you get one of those companies, whichever company they represent. You'll see some variation now too, where those companies may have the first right of refusal. And if they decline the property, they may have the ability to broker to a few other companies. So there may be some additional options through direct writers. As a broker, we are not affiliated with any one company. Instead, we have company appointments. So we're given underwriting authority to write business on behalf of these companies. And for our side, that would include Safeco, Nationwide, Travelers, Capital Insurance Group, Hartford Insurance, and others. Unfortunately, and this speaks to all, both direct and broker options, most of them are not actively writing homeowners insurance in this market. There's a couple that are, but not very many.
So we're gonna lean now in a little bit more of the California Fair Plan. So you were saying that these insurers are not actively doing new policies; they might have existing policies, and California. I don't know if it was a statute or if the legislature created the California Fair Plan, but it was designed to catch people who had basically uninsurable or otherwise uninsurable properties. And so my understanding, and this is where it's a question, but is that they're an insurance company's footprint in California, they have to take on that same percentage of these uninsurable properties. And so the game is they want to have less of a footprint, so they have to take less of those high risk policies. Is that right?
You're right on the right track with that. Yeah. So Fair Plan was established, I think it was 1968. And
Oh,
it was
wow, that long ago. Oh,
yeah, it's actually been around for a long time. We just didn't know about it because it just didn't need to be utilized in most cases. I mean, I don't even know, we had one or two Fair Plan policies on our books before the last couple of years. Before that, we went to companies like Lloyd's of London to take on this business. And so what's happening now is Lloyd's of London and companies like that were insuring like Main Street homes and homes that wouldn't, be like Tahoe risks or Arnold
right.
or places like that.
Yeah.
Can you guys hear that, by the way? Sorry.
Yes.
Our fire alarm is going off right now.
Oh, well, it's all
We
good.
had it earlier this morning, and anyway, it should be pretty quick.
That's funny.
So
Wait,
anyway,
the fire alarm is going off at the insurance broker's office.
yeah, how about that?
This is like podcast gold. I think we got to keep this in.
You
Perfect.
guys, we really know how to time these things out. Yeah, the alarm is off on the industry and literally in our office. Yes.
Who handles your insurance?
You know what? I might have to actually look further into that. Hopefully we won't have to find out.
That's
That's
hilarious.
funny.
So anyways, with Fair Plan, we had to utilize them more in the last couple of years, and only because companies refused to write business as we want. Even the Lloyd's of Londons of the world, they were just not available where we needed them. And so you were speaking to the companies having to participate. So all the companies I mentioned before with State Farm, Nationwide, Allstate, et cetera, they all have to participate in California Fair Plan. And so they participate in the profits and the losses of Fair Plan. It's supposed to be net neutral. They're not designed to make money. But having to participate in the losses has become a major factor and a big reason as to why we're seeing so many non-renewals. Because, Adam, as you were alluding to, and this is going to happen with the LA fires, these companies are all going to be assessed based on their market share in California. So State Farm has the most business. They're going to get, at least my understanding, they're going to get the largest assessment. And so leading into this whole situation with the LA fires, California Fair Plan had enough companies worried that they were going to just generally try to downsize in California. And so that has led to a lot of these non-renewals that we've seen. And so, the concern now, just when it felt like this year, we were starting to turn the corner and preferred companies were going to start at least at some level, start to slowly write business in the state again. Now, all of a sudden, we've taken steps back and we're going to see what happens. These companies are waiting to see what that assessment looks like and to strategize going forward what that means for them in California. And it is concerning a bit. I mean, we're going to have options. We always will. But the concern is if any one company decides, hey, we aren't going to do business in California anymore, that would have a tremendous impact because our options are already so limited.
Yeah.
So Fair Plan, they're a necessary play at this time, unfortunately, because they're the only option in more cases than we've ever seen.
Yeah.
Interesting.
So so we're seeing like we had clients looking at a house that had multiple issues. It was not in a good place, heavy tree area, but then also the roof was toast and a few other things. And they went before they wrote an offer and they got it. I don't know who they called, but the insurance was quoted to them $19,000 a year for a 2,000 square foot house I think it had a Martinez address.
Yeah.
So that's kind of an extreme case. But when a homeowner is either as a buyer trying to do research or we've had a number of clients in Orinda. For those of you not familiar with our area, it's in the East Bay Hills, east of San Francisco, and it's fairly wooded. And it originally had a bunch of vacation homes for people that were escaping the city, and it's been more developed over the years. But it's hilly and has trees. And you can correct me on this. It seems like all of Orinda as a zip code has been red tagged as a insurable or uninsurable. So he got his insurance dropped, and now he's trying to get a replacement policy. So if he calls you and he's got a high risk property, what are the options that you're going to be able to give him?
You're right on with Orinda is the toughest city in the county to insure at this time. It is so difficult. And a lot of that, it's a city under distress for insurance because I give State Farm a lot of credit. They insured a lot of that town and they've non-renewed a lot of that business since then. And, our process is very simple. We start with the best and we work our way through on options. But I can probably fast forward to the reality that we're either looking at some type of specialty program or it may have to, if we don't have any acceptance from those, it would be California Fair Plan. The specialty programs would involve Lloyd's of London. Scottsdale Insurance is a division of Nationwide. It's a non-admitted company. I should probably speak to what that means. So Lloyd's of London, Scottsdale, you have Berkshire Hathaway Guard that operates as a non-admitted company. It just means that they don't have to file rate and rule changes with the Department of Insurance. So it gives them flexibility to adjust their rates as they need to, which is good and bad. I mean, it's good from a sense it gives them flexibility to stick around and do what they need to do. It's bad in the sense that your premium could jump from one year to the next, and there's really not a control on them. But as we're in this market right now, there's going to be more and more of that non-admitted in most cases, and even in areas that shouldn't be as difficult to insure just because either capacity issues or it may be some other qualifying factor that doesn't line up. Those have us writing more of these specialty companies than ever. The premiums you're talking about are not out of line. I mean, I've had some quotes well over 10, approaching 20,000. Had quotes beyond that too. I mean, it's the all homes are impacted. High value homes are especially feeling it because of the limitations for California Fair Plan. They can only insure to 3 million in total coverage. That's everything. So that includes your personal property and really just as importantly in a lot of cases is your loss of use coverage. You really should have at least 2 to 3 years of loss of use coverage, knowing that it's going to take that amount of time to rebuild a home.
Yeah.
And if you had a high value home, you just can't necessarily get those limits. So when we have to go to these specialty markets for the high value homes, I don't even want to tell you some of the quotes I've received in the past year. They're outrageous, but it's also the only option to properly insure. So it's in some cases it's taken, in others it's not. You know, there's some really tough cases out there right now, and horrendous feeling.
So you talked about the non what did you say? No, I want to say non-qualified, but it was non-registered,
Non-admitted
not
companies.
admitted. So, but then what about if you go to the fair plan? Because my understanding is that that's not necessarily a full, you said there was limits of 3 million, but are there other limiting factors? Because I hear people getting secondary policies. Sometimes they use the term wraparound. I don't know if they use that correctly, but what is, if you're forced to get fair plan, what are you getting for it? And then what kind of supplementary insurance might you consider to get more fully insured if that's ever a thing?
Yeah, absolutely. So the main components of the FAIR plan for coverage are, of course, fire, and then also wind. Wind, though, would be wind-driven trees that could fall into the structure. And that's where we could potentially see claims. We had some in Arnold last year. There was a pretty significant windstorm that came through, and a lot of those homes are with California FAIR plan. So we did see losses on that end. Vandalism is also included, but we haven't really had many claims for that. The companion policy you speak to is called a difference in conditions policy, or a DIC policy. And the main components of that would be water damage, theft, and liability. And the general concept is that if you kind of put the two policies together, it essentially equals a homeowner's policy, just generally at least.
Yeah.
So the other option you could consider is, hey, I don't want the whole difference in condition policy for water damage and theft. You could purchase a standalone liability policy because you definitely want to have that at least. You could probably get something like that for around $700 a year to pair with the FAIR plan. So those are really your options for how to structure something with those guys.
Yeah, the liability one scares me. I would to not have that because it only takes some Yahoo. I mean, like you hear the horrible story, like some guy breaks into your house and he slips on something and he sues you, right? I mean, that's the extreme ridiculous one. But you could, you could have somebody, an Uber driver or a DoorDash delivery guy slip on your front porch because there was ice he didn't see, and now you're liable.
I can even give you another example. Just this last year, we had a guy that was brought into litigation because a neighbor claimed he had improper drainage and it impacted his home, or water got in and caused damage to his home because he was claiming the drainage from the neighbor wasn't properly set up. The weird thing was he identified the wrong neighbor in the suit. It was our guy that got named and it wasn't supposed to be. But because this happened, we did have to go forward and file a claim. Because the one thing about liability insurance, and this is almost every company operates this way, or defense costs are exclusive of the policy limit. So they have to defend you. And it wouldn't impact that dollar amount on your policy. That would still be available for settlement, or otherwise. So yeah, you'll get some weird stuff that comes up. So you're all the way on it, Adam. And liability is very important because you can have some very big dollars tied to it.
Yeah. I used to live in the Santa Cruz Mountains, in a redwood forest, and a tree branch fell on one of my colleagues' cars, and I don't know all the details. I think there was originally an auto claim, and then it ended up going to their homeowner's policy, even though it wasn't at their house. And the insurance company said they wouldn't pay out on it because he parked under a tree. And I'm like, we live in a forest. There's no place to park anywhere, you drive all the way down to the beach and then you're not under a tree. And I think that, sometimes insurance companies get a bad rap when you hear stories like that. Um, but but for the most part, it is the safety net that I think allows us all to sleep, like you said in the beginning, you're protecting your single largest investment. And hold on just a sec. Am I back? All right. My camera went out. It happened the other day where there was a big lightning. Oh, not lightning, big flash. Um, but it's the single largest investment that we have. And that to protect that, it's worth the expense of getting it. But just, listen to you talk about all the different facets of it. It definitely is one of those things where people should have a trusted advisor and somebody like you that can help direct them in the right place. Do you see any changes or improvements happening? I know that the Pacific Palisades fire in particular has put everything kind of up in the air at the moment, but do you see any good news on the horizon? Any possibilities of things getting? I am just having a rough day today. Let me try again.
Fire alarm, sneezes, flashing cameras.
My computer went out. All right. Okay. Ray, do you see any good news on the horizon? So if I cut back in here, I just sneezed and we were just laughing our heads off. So I apologize. Ray, do you see any good news on the horizon after, even though things are kind of up in limbo after the LA fires?
Um, the only good news is that there should be some more programs becoming available for options for insurance, but most of those are going to be the non-admitted type of options. I mean, I'll say that there's a new Lloyd's program that became available to us 2 weeks ago, and actually we're still testing it out, and it seems to be okay in Contra Costa County, but it's actually looking pretty good in Alameda County. We've got some Oakland and Berkeley residents where they're actually with California Fair Plan, a couple of them, and I think I'm going to be able to rewrite them to this program and save them money in doing so, which is great, and actually get them, quite frankly, more appropriate coverage. So I think we're going to see this year the development of more of these programs because while we're having struggles with the market, let's face it, there's a lot of opportunity to write business right now. And there's going to be smart companies that come in and say, we're willing to take this on. And so I think that there should be more available options. That would be the good news, I would say. Now, how do those all price out? The reality is I think insurance costs are just going to be going up and will probably stay up. I don't see a relief necessarily on that end. But at least if we can get, people insured with companies we prefer to work with in the event of a claim, that at least positions us a little bit better.
Yeah. And then kind of the other bit about advice for clients. So we think about home buyers are stuck because they can't change the product. They've got to they buy whatever insurance based on what's there. But if we look at it from the home seller's standpoint, are there things that homeowners and anticipating selling that they can do to make their homes more insurable? So you talked about roofs, obviously keeping it in good repair. Obviously, you don't want to. I mean, the dual-edged sword about having a 50-year roof that you have to change in 25 years. We'll leave that out there at the moment. But keeping your roof up, are there other things that homeowners can do that you notice make their homes easier to insure?
There's a number of things that could be done. One of the things that has really become a focus are trees in proximity to the home and actually specifically either touching or overhanging the roof. Companies have really pushed back on this and say you have to cut those back away from the roof. So that has become a big one. And a lot of non-renewals have cited that as a reason is because of trees. But in a lot of the cases, we've been able to remedy it by evidencing they have been cut back. And then that renewal is offered, that non-renewal is rescinded, and they once again will have that company. That's a big one. Older homes are going to have challenges. And the big things that we're seeing, you alluded to it, electrical is a big thing. If there's older boxes, older circuit boxes on the property, those can be scrutinized or ineligible. On the plumbing side, that program I mentioned to you, that Lloyd's program, they require all copper plumbing throughout. So things of that nature, or PVC, I guess they'll take as well. But basically, they're saying they don't want galvanized at all. Uh,
Interesting.
so that seems to be one thing. That same program now also has a requirement for homes built prior to 1960 that if they're not seismically retrofitted, they would require a seismic gas shutoff valve to be installed, which is reasonable enough.
Yeah.
The company has that, but I could see more moving to that.
Mm-hmm.
Is that insurance companies also understand that, if an earthquake hits and a fire follows, they're on the hook for that claim because it's a fire now, and then that would fall. So they want to make sure the home is as protected as it can be from an earthquake as well. Um, so those are at least a couple of things that we're seeing. And there's the other thing I would recommend to consider is this. It's not necessarily going to line you up for coverage, but I'm talking about, hey, take a higher deductible. A leak detection system I'm recommending to a lot of people, and that is because they become pretty affordable. I know there's a lot of options, but Moen has this water flow device. I think it's like $500. You get that installed, you get the app on your phone. It'll tell you if there's a disruption to the water flow in the home, so you know, hey, there's a leak happening. And some can have more sophistication involved with them, but it's just if you're not going to file a claim for as much as you can, those preventative measures are really smart to consider, and it's at least fairly affordable too.
Yeah. All right.
I have a
That sounds
question.
good.
I have a quick question. When we're getting ready to write an offer on behalf of a buyer for a house that they really like, the first thing we have them do is call at their insurance company and find out if the house is insurable, and if so, get a letter. What can we do in advance of that phone call to prepare the buyer for the questions you're going to ask?
The So it depends. So if you're talking like if it was an existing client of ours and we're going to be helping them with such a situation.
No, it would be one of our clients, and we say you should call Ray and see if you can get
I'm sorry.
insurance.
Yeah.
What kind of questions are you going to ask them? What do they need to know so we prepare them for the phone call?
So there's just some very basic things for some companies needed, really basic, just like birthday, occupation, your current address, easy stuff. As far
Okay.
as the property goes,
Yes. Proper.
the age of the roof is really good to know.
Okay.
Because that falls into that somewhere we run into the stipulations with the age.
Okay.
Uh, if other than that, really asking about if there's at least any animals in the house too. Some companies have restrictions on that. If it's hard because I know we may not always have the details on electrical and plumbing updates as well, but if we can have that, that's great. The
Okay.
good news for us is that the listing information gives us a lot of what we need to at least give me most of what would be required to quote something.
Okay.
And sometimes if it's quoted, it may have a stipulation to say, well, we do need to confirm X, Y, and Z. But assuming that's the case, and it sounds like it likely would be, this would be an available option to you. Um,
Okay.
so updates to the home would be the number one thing if available to provide.
We've also had quit people or agents ask, how far is the house from a fire hydrant?
That comes into play too.
Yeah.
And the general on that is it needs to be within 1,000 feet of a fire hydrant.
All
We
right.
don't even know if the specific, as long as it's within 1,000 feet, that'll satisfy most.
Okay.
And that comes into play with California Fair Plan, of
Okay.
course.
Good. Very helpful.
Ironic about that. So I didn't mention this to begin with, but I've been dropped by three insurance policy companies in the last 5 years, um, including a Safeco company, Liberty Mutual.
Oh,
Right, Liberty Mutual is a subsidiary there. So in that time frame, a property got developed two doors down from me, and in order for them to build that house, they had to put in a fire hydrant. So I now have a fire hydrant directly in front of my house. Well, it's
Oh,
across the street, but it's directly in front of my house, but across the street. And I still got dropped by the second company after that went in. And then the current one, like you said, they required that I cut the branches back from my roof. I had some moss growing on my roof, so I mean, just simple home maintenance. I did not consider it burdensome to go do that. It was like that's just good home ownership.
yeah.
Um, uh, but so it wasn't onerous to get reinsured, and the policies, I don't know how good they are because I haven't had to make a claim, right? I mean, like you don't know till you need it. Um, but it was just interesting that yeah, the fire hydrant used to be at the end of the block, which I think is within 1,000 feet, but now it's like 15 feet.
Yeah, peace of mind if nothing else too. That's good to have that available for you. And I'm curious too. You mentioned Safeco being a company that non-renewed too, because we have more business with Safeco than any company, and we're going through it right now because they are non-renewing a fair amount of business.
Yeah.
Most of it stems with those tree branches and the roof issues. You mentioned moss on the roof. We've had clients power wash the roof, and others where they trim the trees back, et cetera. And we've been able to retain a lot of that with them. In not every case, in some cases, it's just not solvable. But in a number of them, they work. You can make it work, but it's hit or miss.
Yeah.
It really can be difficult at times.
The other irony was this house in Oakland that we were rehabbing. We Safeco dropped us there, um, my brother and I, and one of their reasons was because there was too much debris piled up around the house. So it had been a rental, and so the original satellite photo they were using was of the tenants' belongings. Well, they had moved out, and we started doing this major renovation, and so the contractor had this pile of trash that he would haul away periodically. And I could never time being there right after he had moved his pile. So I couldn't get a picture of the backyard with nothing in it. And so they ended up dropping us anyway because I couldn't get a clean picture of the backyard without a hazard. Anyway, just kind of funny stuff.
That's a very tough one. Unfortunate timing, Adam. I'm sorry it
Yeah.
worked out that way.
Yeah, I just what I needed to do was to be more clear with I just assumed that they would give us a break because like we're putting in new plumbing and we're putting in new
Yeah.
electrical. Like I'm making the house so much better for you to insure. And I just assumed that they would give me, a little extra time to get past this construction. So I didn't rush over there. Like I should have just told the contractor, I need to know what day you're gonna haul that away so I could take a picture. And anyway, it is what it is.
And it really goes case by case. It's interesting that even working to get these non-renewals rescinded, and I think it's okay for me to say this. Sometimes you can get an answer one way from one person and another answer that's positive from somebody else. And so the human touch can sometimes impact, but that unfortunate timing is a tough one to work around in that case, Adam. We've ran into similar cases on our end too.
Yeah.
Yeah.
Hey, Ray, thanks so much for joining us. You've been really insightful. Pleasure to talk to you. And I feel like I'm better educated, and I think our clients are going to be better educated just listening to you. Any other final thoughts before we sign off?
No, I appreciate the time. Anybody that needs help on insurance, you're welcome to reach out. But if you're not in touch with your current broker, just don't be afraid to ask questions and just make sure everything's in line as it should be.
We're going to put Ray and R.C. Fisher's contact information in the show notes so you can reach out to him directly, or you can reach out to Sherry and I, and we will get you in contact with him. This has been The Real Story with Adam and Sherry. If it was good for you, please like and subscribe and recommend us to your friends and family, and we'll see you next week. Bye, everybody.